Hi, this is Rick Coughlin at CoughlinHomes.com, the only realtor you'll ever need. If we're hoping to buy a home this year, one of the things we're going to want to be able to do is to prove to that seller that we can afford to buy the home, that we have the assets or the loan capabilities in order to be able to get it. So in order to be able to show loan capabilities, we get a pre-approval letter from a lender. And many times the lender is going to be asking for a lot of documentation right up front. So we want to make sure we're prepared. Some of the documentation you're going to need are your last 2 years tax records. Those are going to be signed tax forms, tax returns that are going to also include your W-2s. If you're self-employed, make sure the 1099s are attached. And the last 2 years, and they're both going to be signed. If you're going to be looking for first-time homebuyer programs, in many cases the lender is going to be looking for your last 3 years tax returns. That's to show that you have not owned a home in the last 3 years and do indeed qualify for the first-time homebuyer programs. If you are self-employed, make sure you bring a year-to-date profit and loss statement with you as well. If it can be prepared by your accountant, even better. You're going to want to have your last month's pay stubs reflecting your year-to-date income and your just the record of your hours and showing that indeed the employment has been pretty steady. So your last 2 months pay stubs you're going to be bringing, or last 2 months pay stubs you're going to bring as well. Your last 2 months bank statements. Make sure you bring your last 2 months bank statements, and that's going to be checking account, savings account. Is going to be any IRA information that you may be tapping on in order to make your purchase. If you've got stocks or any financial statements, any of that stuff, investment records, any of that stuff, last 2 months statements is what you're going to be bringing. And again, that's going to show that you've got the assets with which to complete the purchase. Anything that any history you might have for long-term debt. Long-term debt is considered anything that you owe more than 10 months on. It can include student loans, can include car purchases, alimony, anything of that nature. Keep in mind, people ask about what the effect of debt is on their ability to be able to buy a home. Right now, interest rates are about 4.5%. That means that every $1,000 that you borrow on your home is going to cost you about $5 a month. Put another way, if you are making $100 in payments on a car loan or on a student loan, that represents $20,000 of mortgage money that you're not able to buy. So that means the more long-term debt that you have, the more debt that you have, the less you can actually borrow, because every $5 that you're paying for debt represents $1,000 of mortgage money that you're not able to get. So keep that in mind. That debt definitely adds up. Don't make any major purchases. If you're buying a home now, if you're making your offer soon, do not make major purchases. Here in Massachusetts, we have tax-free holidays that'll come up periodically. Many people want to buy their appliances, they want to buy their furniture during that tax-free holiday period. The problem is, if you make that purchase now, the bank will end up running a credit check probably a couple of days or a few weeks before the closing, and if it shows that you've made a major purchase, that could affect your ability to be able to complete your purchase on the house. So don't make any purchases. Once you've made the decision to buy a home, don't buy anything else until such time, certainly not on credit, until such time as you close on the house. If you want more information, certainly give me a call or visit us online, CoughlinHomes.com, CoughlinHomes.com, the only realtor you'll ever need.